Imagine you are told you're in the United States to do research, and the money you're getting feels connected to science, to a lab, to a big government-backed facility. Now imagine the tax story swings on one question. Is this money in no strings research grant, or is it just a salary with a lab coat on? Here's the numerical whiplash. The opinion lays out. At one point, the court's earlier decision treated roughly $156,000 as effectively tax-free under a treaty. Then, after an appeal and remand, the government pressed the opposite view. Roughly $156,000 should be treated as taxable compensation. From December 2019, when the tax court originally ruled for the taxpayer, to February 5th, 2026, when the supplemental opinion was filed, years passed, and the stakes snapped back. That's about $156,000 swing and what gets treated as taxable income. And at the end, the final allowed treaty-exempt amount was basically zero, meaning close to $156,000 was treated as not protected by treaty at all. That's the theme of this case. When the court decides your grant is actually paycheck, the label doesn't save you. My name is Alex Dvorkin. I'm a certified public accountant in the state of California. And if you like this kind of real case breakdowns, please like this video and subscribe to this channel. Because this channel reviews and analyzes U.S. tax court cases to understand how U.S. tax law works. In this video, we cover the tax court decision in the case of Vitaly Nikolaevich Baturin versus Commissioner of Internal Revenue decided on February 5th, 2026. The opinion opens by telling us that the petitioner is a citizen of Russian Federation who in 2010 and 2011 was in the United States as a non-resident under a J-1 visa as an exchange visitor working as a research scientist at the Thomas Jefferson National Accelerator Facility, Jefferson Lab. The case doesn't treat this as a vague visiting scholar situation. It treats it as a real job at a real facility. And that word job is the entire plot. The petitioner filed U.S. non-resident return Form 1040-NR for 2010 and 2011. The IRS examined them and sent the notice of deficiency dated April 1st, 2014, saying he had received income that was not exempt from federal tax, about $77,000 in 2010 and roughly $79,000 in 2011. The IRS computed deficiencies of about $11,000 for each year. Penalties were initially asserted, but the commissioner later conceded them. So why was he fighting about those wages at all? Because he reported the remuneration but claimed it was exempt under Article 18 of the Convention for the Avoidance of Double Taxation and the Preservation of Fiscal Evasion with respect to taxes on income and capital between Russia and the United States, the U.S.-Russia Tax Treaty. This is where the story gets unusually dramatic for a tax case. The petitioner originally won. The tax court issued an opinion in December 2019 holding that the treaty shielded from taxation his entire income for 2010 and 2011 as a grant, allowance, or other similar payment, so his income was exempt. In plain English, at that stage of the saga, the court accepted the idea that his lab money fit inside the treaty research and visitor protection. But the commissioner appealed, and the U.S. Tax Court of Appeals for the Fourth Circuit revised in the opinion dated April 6, 2022. And the Fourth Circuit didn't just say, try again. It gave the tax court a checklist, a set of questions the tax court should answer to decide whether this was really a treaty-protected grant or just taxable pay. The supplemental opinion is the tax court coming back after remand and basically saying, we ask the question and the answer points one way. To understand why, the opinion rewinds into the petitioner's relationship with Jefferson Lab. In October 2006, he received and accepted an offer of employment from Jefferson Science Association, connected with Jefferson Lab, a Department of Energy facility in Newport News, Virginia. Starting in 2007 and continuing through the year at issue, he was in the United States on that J1 exchange visitor status to work as a research scientist. And the parties stipulated that in 2010 and 2011 he was a non-resident alien research scholar temporarily present in the United States. The opinion doesn't paint him as someone drifting through a university seminar. It describes Jefferson Labs as a giant machine, the continuous electron beam accelerator facility with experimental holes A through D. The petitioner worked as a staff scientist on a specific effort in hole B, the 12 GeV upgrade to the CEBF Large Acceptance Spectrometer Detector Project, the 12 GeF upgrade project. His responsibilities included designing and constructing new detectors, including the central time of flight detector. And then comes the employment texture. Details that matter because they make the payment look less like a grant and more like a job. As an employee, he received full salary and benefits. He completed timesheets and he was paid biweekly. He had been told his starting salary was $75,000. He was required to use direct deposit and he had to submit to a medical exam. The offer later also had the kind of sentence that in tax court tends to detonate treaty argument. His employment was governed by the policies set forth in the Jefferson Lab Administrative Manual, and his employment was contingent on satisfactory performance and the continuing availability of funds and work. In other words, this wasn't money dropped into his lap for advancement of science. It was money attached to performance. The opinion also describes the supervision structure. During 2010 and 2011, the Hall B project manager provided supervision and guidance, and the petitioner's direct supervisor, who served as group leader, also provided guidance and supervision, evaluated and rated his performance, and prepared performance appraisals every year he worked there. That word appraisals is not a treaty term, but it's a workplace term, and the court treated it like a workplace term. Then there is intellectual property piece. On May 16, 2007, as a condition of employment, he signed an agreement on intellectual property, and under that agreement, Jefferson Lab retained all the rights to the product of his work. That detail becomes crucial, because on the appellant court question was who keeps the right to the research output. Now we get to the Fourth Circuit remand instructions, the backbone of this 2026 supplemental opinion. The Fourth Circuit said the tax court should determine what Jefferson Lab gained from having him on staff, and suggesting questions like, if not him, would the lab have hired someone else? Did the projects predate or postdate his tenure? Did the lab retain rights to the research product? How much discretion did he have day to day? And in short, was there a substantial quid pro quo? In other words, was Jefferson Lab paying him out of generosity for research training or paying him because it needed work done? Back in tax court, after remand, the parties filed additional stipulations. The case was set for trial, then pulled off calendar because the commissioner proposed resolving it via summary judgment. The court repeatedly told the petitioner he could submit a material showing why a trial was needed and could provide evidence creating a genuine dispute of material facts. He submitted proposed trial exhibits, but the court ultimately held his additional evidence didn't create a genuine factual dispute. That matters because the opinion doesn't resolve this through another live trial narrative. It resolves it through a summary judgment. The court explains that summary judgment is granted when there is no genuine dispute as to any material facts, and the movement is entitled to judgment as a matter of law, and it emphasizes that the non-moving party can just rely on denials. He must set forth specific facts supported by admissible materials. Now the treaty itself. The opinion frames it like this. Under Article 14, the general rule is that wages for employment exercised in the United States may be taxed in the United States. So absent an exception, the US can tax the pay. The petitioners hoped for exception is Article 18, which covers certain students, trainees, and researchers. The key text is the part that exempts an individual temporarily present for research as a recipient of grant, allowance, or other similar payments from qualifying organizations with respect to the grant, allowance, or other similar payments. This opinion says the parties agree Jefferson Lab fits the government or scientific source idea, but they dispute whether the payment are truly a grant allowance or whether other similar payments. Then the opinion takes a detour into what the petitioner argued on remand and why those arguments didn't help him. First, he leaned on the fact that he was a non-resident alien and suggested he wasn't subject to the same tax obligations as a U.S. citizen. The court response is blunt and grounded in an appealing opinion. Ordinary, any income that non-resident alien receives for personal services in the United States is taxable in this country. In other words, non-resident status is not a magic clock. If you perform services here, the default is taxation. Second, he raised an argument about withholding under Section 1441, claiming his compensation was exempt from withholding because of his J visa status. The court treats that as both procedurally barred and substantially misguided because tax withholdings differ from tax exemption. That is to say, even if someone didn't withhold tax, that doesn't automatically mean you don't own it. Now we hit the decision engine, the quid pro quo. Analysis the Fourth Circuit demanded. The supplemental opinion says the Fourth Circuit looked at Section 117 scholarship rules to inform whether treaty payments are grants versus compensation. The distinction is between taxable payments for work done as part of substantial quid pro quo and relatively disinterested no-strings educational grants. And then the tax court methodically answers the Fourth Circuit question using what it calls a Baturin factor. On the first factor, if not this researcher, would the lab have hired someone else? The court credits a declaration from the supervisor stating that if the petitioner had not been available, the lab would have hired another qualified individual to do the staff scientist's work on the detector upgrade. The petitioner didn't dispute that. The story implication is obvious. Jefferson Lab wasn't funding him because it needed him in some personal grant-like way. It needed the work done. On the second factor, whether the project predated or postdated his tenure, the parties stipulated the 12 GeV upgrade project predated his hiring and continued past his departure in 2015. And the opinion adds a striking still going detail. As of December 2024, the central time of flight detector was still in operation as part of the project. That is court's way of saying this wasn't his personal research arc. It was an institutional project with institutional continuity. The petitioner tried to resist by pointing to earlier related work he had done before being hired, arguing in effect that he had been involved early in the upgrade project. The court assumes for argument that his assertions about earlier involvement might be correct, but says that still doesn't show the project depended on him. It notes documents indicating the project was ongoing since 1996 and concludes there is no suggestion the lab would have done the work but for him. In narrative terms, experience can make you a great hire, but being a great hire doesn't transform your salary into a treaty grant. On the third factor, who retained rights to the research output? The court points to the 2007 Intellectual Property Agreement and states the lab retained all the rights to the product of his work. This is another employment-like indicator. The institution owns what you produce. On the fourth factor, how much discretion he had day to day. The court leans hard on the stipulated facts. He had a supervisor and a project manager providing supervision and guidance, and he was evaluated annually. The court says he made no evidentiary showings to counter the fair import of those facts. He suggested this may require interrogation of a supervisor, but the court says maybe isn't evidence. And then the fifth summary factor, was there a substantial quid pro quo? Here the court language is direct and final. It says Jefferson Lab's biweekly payments were not disinterested, no strings grant, but were a quid pro quo in exchange for his assigned work on the 12 GeV upgrade project. It says Jefferson Lab extracted a substantial benefit in the form of personal service he rendered. The opinion goes further. It emphasizes his employment was governed by lab policies, was contingent on satisfactory performance, and he could have been fired if failed to perform. Plainly, the court says the compensation was paid in return for his work, and he performed his work to earn his compensation. If you are looking for the moment the story turns, this is the moment. That's the court looking at the treaty word grant and saying in substance, nope. They hammer the point home. The court also discusses the appellant court's reference to Revenue Ruling 8036, which describes when researcher income might be exempt and when it's not. The tax court quotes the ruling idea that exemption does not extend to professional researchers receiving compensation for performing research services, and then contrasts the ruling exemption-friendly conditions: no supervision, free publication choice, no other person's rights to the product, with the petitioner situation where none of those conditions fit. So the ending is procedural but decisive. The court finds no genuine dispute of material facts and grants the commissioner's motion for summary judgment. The payments were compensation for services and therefore not exempt under the code or under Article 18 of the treaty. And that's the punchline of this entire saga. The case begins with the researcher on a J1 visa arguing treaty protection for the lab money. It passes through a taxpayer win in 2019, then it gets revised in 2022, and by February 5th, 2026, the tax court, following the appellant's court's checklist, concludes the lab got what it paid for, and that's enough to make the payment taxable compensation rather than treaty-exempt grant payments. In summary, when your grant comes with timesheets, supervisors, annual performance review, lab policies, biweekly payroll, and an intellectual property agreement handling the lab rights to what you create, you may be calling it a grant, but the court is hearing payroll. My name is Alex Dvorkin. I'm a certified public accountant in the state of California. If you like this video and found this information useful, please like this video and subscribe to the channel. And we'll see you in the next tax court case review.